Start recording. Let me start recording. Shri Gurubhyo Namaha. Om Shri Ganeshaya Namaha. This is Inflapro 2nd, part 13. A marshmallow experiment in finance. This video series will be beneficial to startup in financial services looking for new ideas. BNV's Marshmallow experiment in finance. Finance reward for delayed take. In simple language, instead of taking 2 cakes on each day for 3 days, take 1 cake for today, more than 2 cakes tomorrow, and more than 3 cakes day after tomorrow. Yes, instruction for BNV. Before recording this video, clear background. Yes, I have cleared the background video audio. Okay, no problem. See, disclaimer. I am Brahmadeshan Venkataraman. This video presentation is for information, educational and estimation purposes only, and not to recommend buy or sell, invest or redeem your funds. Every investment has its own associated risks, and without knowing the risk, don't invest. I am neither an agent, nor a broker, nor any advisor, simply an analyst with computer background. Important. There is no need for screenshots of this video presentation, as the PDF of slide with clickable links for further PDF files of the auditables that are being discussed in this video are also given. The link of this video PDF is given in description box in the YouTube below. About Inflapro. Inflapro is inflation protected return calculation. Inflapro is not a financial product you can buy or invest in directly like FD or pension policy you purchase from bank or insurer. Instead, it is a method, formula developed by bnvenkataraman, that is myself, for computing inflation adjusted periodic returns on an investment that can be achieved by do-it-yourself method. The DIY, do-it-yourself, will be explained in subsequent later videos, not in this video. About Inflapro. What the Inflapro method does. According to the original description of bnvenkataraman from his website and tutorials, Inflapro stands for Inflation Protected Return on Investment. It is a calculation approach designed to adjust periodic payouts like interest, dividends, pensions, repayments, recurrent deposit, SIP, SWP, insurance, etc. So, they increase over time with inflation. In case of insurance, the premium increases so as sum assured. These are novel technique and new idea based on scientific method for financial service companies. Why it was proposed? The author introduced Inflapro around 2010 to deal with rising inflation. The idea is that a return should grow in line with inflation instead of staying flat, constant as in conventional methods. How it works? Instead of giving fixed annual payout like 8,000 rupees every month and 1 lakh rupees deposit, so for easiness I have taken simple calculations, at 8% interest. The inflation calculation may start with a lower first payment of rupees 5,000 rupees. Instead of 8,000 rupees, it starts with 5,000 rupees and increases each year an inflation rate by choose, that is, say 6%. Over time, this means your payment amount each year grows, aiming to keep up with inflation. Of course, sample calculation is link is here. I'm not clicking it because loading time takes quite a long time. Therefore, I will go to the page correspondingly straight away right now. Say here. It is available in another tab. I am going to that one. Let us see. Here, I am considering 1 lakh rupees principal, 6% inflation at, say this was earlier giving 6%, I am giving to correcting to 6%. 6% inflation at 8% rate of interest, at yearly return, yearly frequency, period is 20 years, and others different. Now custom LIC. LIC options 3 is with return of purchase price. Let us take value item 3. Yes, it has taken. Option 3 is annuity for life with capital refund on death of annuitant. See, we are considering at 8% for simply 1 lakh rupees for the calculation purposes. And now click or submit. Since there is a submit button, you submit it. It's not clicking. Yes, it has clicked. Check the submit button, and validation is okay. Click here to submit. You can click here. Yes, it has calculated. See here, option 1, 2, 3 are conventional. 2 and 3, let me hide it. You can see this option 1, that is conventional one, is 8,000 rupees per month, per year, and 1 lakh rupees principal amount refunded after 20 years time. Here in the case of option 4 of Inflapro, it starts at 5,000 rupees onwards and increases every year by 6% and goes up to 15,000 rupees in 20 years, and after which either further pension of 8,000 rupees fixed or 1 lakh rupees surrender value. In case of conventional one, if annuitant does some unfortunate event happens, let us say at the time of 10 years, then the pension terminates with the refund of this 1 lakh rupees. Whereas in the Inflation Pro, it is guaranteed for 20 years and nothing more, and return of purchase price after 20 years. Okay, let us keep it aside. Go custom. Let us keep it aside. We will go back to our presentation part of it. Presentation part of it is here. It is in the it is here. The presentation part is here. About Inflapro, bnvenkataraman material describes multiple Inflapro option 1, 4, 7, 10 corresponding to option 1. This is what we have seen. Option 4 we have seen. Option 1 is also 2 and 3 are conventional traditional annuity schemes. Inflapro option 4 is calculated such that after the term end benefit, that is maturity further pension, is the same as the conventional one. If there is no return of purchase price in option 1, then option 4 also there is no return of purchase price. Inflapro option 7 is calculated in such a way that after the term, further pension is the same as the last pension or the maturity on survival of the full term is sufficient to pay at the same rate of interest the last pension until death of annuitant, last survivor, as the case may be. Option 10 is calculated in such a way that after the term, further pension is same as half the last pension, or maturity or survival of full term is sufficient to pay at the same rate of interest half the last pension until death of the annuitant or last survivor, as the case may be. More detail can be seen in the tutorial page of this website. I can click it, already available in the another tab. Let me try clicking it in an additional tab. Yes, this also comes forward. Only this customer menu takes long time. Anyhow, let us see. Let us see further about Inflapro. This video is with pension schemes equivalent to that offered by insurance companies. Any startup company can take this idea and start working on it. In India, only 13% of the population work in organized sector and have structured traditional retirement plans. Within this, about 70% of the investors desiring pension opt for PPF or EPF, NPS, UPS, etc. just out of compulsion. About 20% opt for annuity plans offered by insurance companies. About 25% opt for mutual fund, SWP redemption as a pension plan. See here, 70, 20 and 25 is more than 100 because there is overlapping of about 15% of the people with taking mutual fund as an option in addition to traditional annuity plans. Some unorganized sector people also going for the annuity plans. Any startup financial services following my Inflapro way can capture the entire market, this entire market, because a constant pension is in no way help the investors to beat inflation. That too, if a person wants to survive for 55 years or person surviving 55 years, that is from 45 to 100 years. Surviving 100 years, then wife surviving further 15 years and so on. The author has suggested many calculators to get into Inflapro way in EPF, PPF, etc. to government authorities. In part 1, part 12 of the series, catered to the annuity plan for insurance companies. Many YouTube videos have been posted regarding the mutual fund schemes and will continue posting. The following describes about annuity plans covered in my previous videos. Say, the annuity plan options. In the market, the following annuity plans are available. Life annuity. One is, in case of LIC Jeevan 6, they call it A, scheme A, life annuity. Then option 2 is option B, C, D, E. Life annuity with guaranteed period 5, 10, 15, 20 years, considered for 15 years. In my calculation, it is considered for 15 years schemes. 15 years guaranteed. But actually in Inflapro option, the guarantee is for the desired term. Let us say for 40 years person up to 55 years means this life expectancy up to 100. And up to that it will be a guaranteed one, irrespective of death before or not. F, life annuity return of purchase price, like 1 and 2, but it is within and within return of purchase price. Option 4, G. This is similar to my Inflapro, but it is in simple interest basis. Life annuity with increasing annuity at specified rate, say 3%, simple interest basis. Number 5, H. joint life annuity with 50% annuity payable to spouse on the death of the annuitant. Then option I, that is option 6, that is the I in LIC. Joint life annuity with 100% annuity payable to spouse on death of annuitant. 7. Option J, joint life annuity with return of purchase price. Same like 5 and 6. The above are LIC Jeevanakshi 6 options. To cater to others like SBI, ICI, the author has introduced suffixes that are displayed as follows. In option 1, with life annuity, D. I am not having ABC, but only simply D. This is for my convenience. 1D, 2D, rather 4D, and 5D, 6D are all annuity with return of purchase price. Therefore, D suffix has been taken for convenience. 1D is annuity for life with capital refund on death of annuitant. Same as option 3, 3A. 1D is return of purchase price, the same as option 3, option 3A. Option 2D option is life annuity with guaranteed 5, 10, 15, 20 years with capital refund on death of annuitant. But for the interest rate, other calculations are the same. Option 3A, annuity for life with capital refund on death of the annuitant. Annuity 3B, annuity for life with capital refund of 30% on the 7th year of survival and 70% on death of the annuitant. This is in line with SBI schemes. Option 3C, option of 3C, annuity for life with capital refund. This is already same as 3. 4A, 3C, there is a small clue. 3C is balance, the capital refund with the balance of the balance of the annuity paid. That is balance capital after deducting the annuity paid. 3C is okay. It's not clear now, not clearly mentioned in this line, but it is for 3C is for refund. You can check it on this scheme. Let's see here put it 3C in the custom menu. It will tick up. Option 3C is annuity for life with capital refund at balance capital less annuity paid on death of the annuitant. It's not very clearly mentioned here in this 3C option of this presentation. 4A, option 4A, life annuity with increasing annuity at specified rates 3% for in SBI, LIC, etc. LIC 4 is the same. Simple interest basis. Option 4B, life annuity with annuity at specified rate of 5% in SBI, specified rate, simple interest basis. In our custom menu, we have to choose. Okay, coming. Option 4D is life annuity with increasing annuity with specified simple interest basis with capital refund on death of annuitant. In Mark LIC menu, that is one of my software, Mark LIC menu, and the same software. Custom menu, one has to specify the increasing rate as 4A, 4B, and 5, say 5% in appropriate field. See here, okay. I'll here this is this period. You have to mention it. Is 5% or 6%, etc. Let's say 5%. Let us say 5% at 8% on the. Let us take 4D with capital refund. 4D is annuity payable for life increasing at simple interest of specified percentage 5% here. That is 4B. Specified percent is 4D. 4D is for actually for 3%. I will mention is 4C. 4B, 4C. 4B, let us take 4B, 4A, 4B, 4B are all without refund. Let us take 4D as with refund of capital, with 5% one, with 8%, with 1 lakh, let us take per year. Submit it. Is taking time. Submission and next submit. Yes. In the conventional one, it is starting with 5,900, goes up to 11,500. In option 4 of this Inflapro, it is varying from 5,400 and varies with 5% compound basis. Here it is 5% simple interest basis in option 1, conventional 1. In option 4, it is 5% compound interest basis. See, look at it. It starts with 5,400 but goes up to 13,800. Here it is only 11,500 in conventional 1. In Inflapro we got 13,800. Let us go further. Likewise, we have to specify the rate in the appropriate way. Let us see 5A. 5A is joint life annuity with 60% annuity payable to spouse on death of annuitant. No mention about return of purchase price. 5C is the same as 5A, but it is 60% annuity payable to spouse on death of annuitant with 60% capital refund. Then in 5D, see, as a D is option for the return of capital fund, is 50% annuity payable to spouse on death and annuitant with 50% capital refund. In the other case, it was 5C was 60% capital refund. In 5D, it is 50% capital refund. Option 7A, annuity for life with a provision of 50% of annuity payable to spouse during her lifetime of death of annuitant. The capital will be refunded on the death of the last survivor. So, 7B also similar, but it is with 100%. It is same as option 7 itself. In this case of option 7, 7B, 7A, 7B, etc., not etc., option 7, option 7A, option 7B. In these cases, the guaranteed time is for up to life expectancy, let us say up to 100 years of the annuitant, then further 15 years for spouse time. These are guaranteed for that much period. If a person is taking insurance taking this annuity plan at 45 years of age, he can benefit for 55 years with respect of death, then further 15 years as the spouse time, and can continue for the nominee. Even if the death of last survivor, it can continue for the last nominee. Otherwise, whatever unbalance was there, that can be taken away and the scheme can be stopped further. BNV's Marshmallow experiment, Stanford Marshmallow experiment. The first experiment in delayed gratification was conducted by Mitchell and Epson at Stanford University in 1970s. The purpose of the study was to understand when the control of delayed gratification, the ability to wait to obtain something that one wants, develops in the children. And it is available in the Wikipedia. I have given you a link. Similar to the above experiment, the financial reward is there in Inflapro as delayed gratification. BNV's Inflapro in delayed gratification. One gets more return if one makes a discount in early years annuity and availing premiums in last years. I can give an example of this. It will take time. See, about for 50 years scheme, etc., the return varies to 5.5 times the return of the conventional scheme. When I get time, I will explain about that later. I have already mentioned Inflapro is not a financial product. You can buy or invest directly like an FD or pension or policy you purchase from banker insurer. But with mutual fund investments, one can have do it yourself DIY and get desired Inflapro benefit, or by saving money out of annuity in initial years in the case of traditional ones and withdrawing more in the later years. Okay. Now, let me go to this. A sample calculation of principal of 60 lakh, 7.4% return and 10% inflation, a protection or step up, custom LIC SBI option 1 and corresponding to Inflapro option 4. If you want to explain, it may take time, I will explain it. I will explain it in the next chapter, next one. That is Inflapro option 4. See, in conventional one, for the 60 lakh, the return is 37,651 or 37,000 rupees approximately, and it is a constant throughout. In the option 1 case, it is for, well, term is only for 55 years, and 55 years the scheme stops for a 45 years entrant. In Inflapro option 4, it starts with just about 30,000 deduction, that is reduced pension of only 4,991, approximately 5,000 rupees. That is about 32,700 rupees less than the conventional one, but increases. By middle of this period, by 25 years, it is more than what conventional one was giving. It is at 49,000 rupees. And in the 55th year, the last year, conventional one gets same 37,651, whereas in the Inflapro option 4 we get 8,57,888, 8.58 lakh per month. Of course, spouse time not applicable in this case. Return of purchase price is, in case of return of purchase price is 0, but death benefit can be if the annuitant there is the life this is a life annuity scheme. Therefore, if a person dies after 1 year, in the case of Inflapro, we get 60 lakh rupees as the death benefit. In 25 years, it goes up to 2.48 crore, and 55 years, because all the pension would have been paid, it is 0. Death benefit after 55th year, that is surveying full term, is 0. Therefore, in case of a person who want to survive, want to have for survival, then beyond 100 years, then he has to save out of the return itself. It's available in this video form, this second portion. Okay, now, enhanced principle. In order to equate The initial pension is at 30,000 rupees. One has to have 4.5453 crore investment in this case of option 1 with 7.4% return. In LIC, SB, etc., the return is of the order of 6%, 5% to 6%, and therefore it will be very high figure, huge figure than that. Anyhow, let us see about this CLAC scheme. And it's available here. Yes, it's a CLAC investment. Interest is 37,000 rupees, but in the option 4, in place of Inflapro option 4, one takes only 4,000 rupees. There is 4,994, and balance is accrued with, and it carries the same interest rate of 7.4%. The auditable is here. One can go through at 25 years what is happening. 25 years, that is mid-term. I have taken this figure of 14,164 available in that presentation, and the death benefit is the run balance, which is 2.48 crore. You can analyze it in detail. Let me go to the presentation part of it in detail. Similarly, with the enhanced principal of 4.53 crore at the same 7.4%, with customer LIC option 1 is life annuity and life annuity. Corresponding to Inflapro option 4, term is 55 years, from 45 to 100 years. I am taking it as term as 55 years. See, Inflapro option 4, it was nearer to that first year figure of conventional one, or the, not only first year figure, it is a regular figure of conventional one. Similar, starting with that, and increases at 10% inflation, and by middle of the year, that is 25th year, it is around 3,71,000 rupees, and in case of conventional one, it was only same 2.84. By middle of the session itself, it has increased, and further go until the last year, 55th year, the conventional one still get a 2.84 lakhs, and in case of Inflapro option, we get 64.77 lakh per month. This is the power of compounding. Death benefit, in case of conventional one, is always 0. In return of purchase price, there is death benefit is 4.55 crore in the first year itself. The 18.75 crore in the middle of the period, or 0 at the end of the period. But by this time, that all the interest would have been exhausted by the pension withdrawal. Look at it, from 37,000 rupees, it increases to 64.77 lakh rupees per month. Similarly, with 60 lakh with option 4D, the figures are here. You can see that in conventional ones, the pension is increasing either constant or at simple interest basis. 3% simple interest. This is 3% inflation protection. There is 3% inflation increasing return, and with option 4, it is starting is less than the first year annuity of conventional scheme, but in the middle of the year itself it increases more than the conventional one. And see, for example, at the 50th year, last year, final year, in conventional one it is 71,000 rupees. In case of compounded one, it's Inflapro option 4, it is 1.20 lakhs 1.20 lakhs per month. Here the death benefit in conventional one is 60 lakhs throughout. In case of Inflapro option, it is 60.12, 1.04 crore and 60 lakhs. Return of purchase price, yes, it is 4D. It's a small error. Return of purchase price is same as the death benefit. Then enhanced ones. In case of enhanced ones, it is quite comfortable. One can start with 1.83 lakhs per month as the annuity, and in middle of the year it is 3.72, middle of the scheme. It is around 3.72 lakhs per month, and in case after 55 years it is 9.03 lakhs per month. And return of purchase price or death benefit is the same in the conventional cases as 4.54, 7.87 and 4.53. Middle of the year it is still where, otherwise we can get increased, that is compound increased pension. Any one of this. Either the death benefit and close the scheme, or continue with the pension irrespective of the death to the nominee. Then comes to the seventh option. Seventh option I have taken is one of the schemes for spouse time. Same, a person enters into the scheme with 45 years. For 60 lakhs rupees, it's 37,000 rupees per month, and the return of purchase price is 60 lakhs throughout. And after 55th year, that is after the age of 100, at the 101st age of the annuitant, can have same pension, same 100% pension continued to the spouse, and maturity benefit is 6 lakhs. In case of Inflapro, it increases. See, it starts with only 3,300 rupees and goes up to 5,68,000 rupees, 5,69,000 rupees in the 55th year, that is 100-year life expectancy of the annuitant, and next year it is same 100% and further increases with 10% protection, goes to 21 lakh per month, and return of purchase price is there for 60 lakh. This is one of the schemes. Same scheme with enhanced payment, enhanced the principle of 4.53 crore, because we have started with 4.53 crore in case of option 1. Similarly here, in case of option 4, it starts with 24,988, that is approximately 25,000 rupees, as against 2,79,000 rupees, but in conventional one it is 2.79 lakh is throughout is the same, and 4.53 crore is maturity benefit. In case of Inflapro option, it increases from 24,988, that is approximately 25,000 rupees, increases to, in 25 years, increases to nearly 10 times, that is around 9.84 times, nearly 10 times. Then further, in 55 years, it is about 450 times actually, and so on. 42 lakh per month at 100 years. Then spouse time start with same 100% for the first year of the spouse. Then increases at same 10%. And in the conventional one, it is only 2.79 lakh. In this case, it is 1.63 crore per month as the pension. Therefore, we can see that in the Inflapro option, it provides Well, inflation protection, well, the link to this is given in this portion. Yes, I can click it and see this. What is the open link and that. Which one is started? Yes. Number 1. Option 4. Yes, option 7 का है 4.53 को 7.4 option. LIC option 1. Sorry, option 7 and INFLAPRO option 4. It starts with approximately 25,000 rupees payout and steadily increases. By 25th year, it is around 42 lakhs. 25th year, it is 2.23 lakh per month. You can see this here. 2.46 lakh per month. 2.46 lakh per month. And gone, and increases so on. And we can see this up to 70 years. That is the annuitant's life, the annuitant age would be 115 by that time. After 70 years, it is 1.63 crore as the payout, and the balance, that is the surrender value, is 4.53 crore. As I mentioned to you, these are not available as a standard product. Either you do it yourself method, or by new startup financial services entrepreneur. Let us now see how the custom LIC works. We have already seen it. The PDF file of these slides are available in the description box in YouTube. And importantly, the PDF of slides contains clickable links for the further PDF files of the audit tables that were discussed in this video. The playlist of series is also available at the bottommost of the description box in YouTube, so that one can one can listen to all my videos of part 1 to part 13. Request viewers to use the calculator and custom choices, and also tutorial to explore it. In this video, we had seen the short tour of INFLAPRO with pension plans comparing conventional schemes. Request viewers to subscribe, like and share to like-minded people. Thanks for watching. Let me close the video. Okay. Let me close this session. Stop recording.